Hey there! Welcome back to another episode of BizData. This episode is going to be all about startups and how they raise funds to carry out their daily errands. As you know, India is currently witnessing a startup culture boom. Behind a full-fledged startup also goes a lot of capital. Where do entrepreneurs get this required capital from? Is it from their own savings, their parents' money, or borrowed money from their inner circle? Can't always be one of these, right? Currently, there have been discovered so many ways of raising funds for one startup. A few ways of raising funds for one startups are using their own savings, borrowing money from friends and family, crowdfunding, loans, venture capitalists, angel investors, etc. Isn't it a great thought to have people who believe in your startup idea come along and support you with capital and mentorship to put your startup into existence? It definitely is. But even today, certain people refrain themselves from investing in startups because of the few myths that fly around in the air. In this video, we'll be debunking 3 myths about startup investing. First, startup investing is very risky. Investment in general is a very risky business. You can only ace this when you dive into the depth of it and understand how every market works before you invest in it. Thus, the statement that startup investment is risky is true to a point. But if you are planning to invest in startups, you should be well researched before you start. There are a few ways you can mitigate the risks that startup investing involves. Research well on the startup idea. Get well versed on the founder and co-founder background. See if the startup is ready and willing to face real-time business situations. Check with the market size and the competitors. Explore the startup long-term goals. If you are familiar with these things and yet think it's worth investing in a startup, it definitely does mitigate the high level of risk. Investing in startup is only for the rich. A few years back, investing in startups was only for people who had big amount to invest starting from rupees 5 lakhs. But as time passed and startup ecosystem flourished in India, there are now platforms like BizData where you can invest in startups you believe will be successful, starting from an amount as low as rupees 5,000. This not only makes it super feasible for big and experienced investors to invest, but also allows college-going students and retail investors to start their startup investment journey. Thus, startup investment is no longer limited to the rich people. Startup investing is a lengthy process. Back in the day, startup investing required a really long process. The process used to entirely be taken offline. The process for investors used to be so hectic that they had to go around and meet with several founders in order to come to a final decision. Now, there are several platforms like BizData that allow you to start investing in startups less than 5 minutes only. All you have to do is head to our website and register yourself. Complete the KYC and you're good to start investing already. Startup investing being the new fad makes it more prone to myths about it. If you wish to start your startup investment journey, get in touch with BizData today. Head over to our website bizdata.com to see how we provide complete transparency to investors to make their investment journey easy and successful.